Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by GetValuate.com. It is an awesome tool for real estate investment analysis. Well, today we are talking about retail. The show is called Retail 2018. Please welcome my next guest, Steve Jellinek. He's Vice President with MorningStar Credit Ratings, and he's joining us on the phone from Philadelphia this morning. Steve, thanks for being with us.
Hi, good morning, Michael. Thank you for having me.
Well, Steve, traditional grocery stores have really been a staple in the commercial real estate and the retail market. And you think about a lot of us, at least some of us around the country, shop in these shopping centers where these grocery stores are anchors. And it seems like these stores have made grocery anchored centers kind of a staple and a safe investment vehicle. You guys are studying the CMBS market and the ratings all the time. I know you just came out with this article, and we'll put a link to this article if you're driving down the road. Don't check this on your website now. Wait till you on your phone till you get home. But it's called Food Fight: Traditional Grocery Stores Should Benefit from Growing E-commerce. And so, Steve, tell us about that. What do you mean by that?
Sure. Well, what we took a look at, Michael, was what do we think is going to happen to the traditional format grocery store over the long term, given the increase in people's focus on e-commerce and the rising growth of e-commerce in grocery delivery and grocery market in general. One of the things that we looked at was that e-commerce growth, the projected annual growth in e-commerce in grocery is projected to be about 25%.
Wow.
By 2021, compared to traditional supermarkets, which are forecasted to be about flat to down to about minus 0.3%. So that kind of led us to ask the question, well, if e-commerce is really going to jump that much, what's going to happen with all the traditional grocery stores that are out there and the real estate that they sit on?
Yeah, and there's a lot of these grocery stores out there. About how many are there?
There are about 30,000 traditional grocery stores across the United States, and they're broken up into different categories. We have, limited assortment. There's the fresh format, which would include something like Sprouts. You have super warehouse clubs, super centers, even dollar stores. They sell groceries as well. And we also have, wholesale clubs. They make up a small chunk of grocery sales as well.
Yeah, and some of these grocery store chains have not done so well, right? Like A&P?
Yep. Mm-hmm. Yep. Yeah. A&P has filed for bankruptcy. They had 16,000 stores back in 1930. They went out of business. Fresh and Easy as well. Marsh supermarkets and bottom dollar food stores, they've all gone out of business as well. But one of the things that we found is that when the grocery stores go out of business, the stores that are in high density areas, they are usually taken over by a competitor and turned into a successful store. And one of the components that we find there is that if the competitor has the sophisticated infrastructure to be able to reinvest in the store and to keep growing with things like technology and food delivery and pickup, then we find that those stores can be sustainable and they can actually, go up against, the big guys like Amazon that are getting into the food business since they bought Whole Foods.
Yeah, that makes sense. And these stores are really changing, aren't they?
Yep, they are changing a lot. We have somebody like Sprouts. I was just noticing their fourth quarter comps actually grew 4.6%. Now, Sprouts kind of falls into the fresh format category, and their year-to-year comps have been above 2%, which is really good for grocery stores given their thin margins. Now, what a company like Sprouts is doing is they've really got their eye on the ball, and they've partnered with home delivery, including Amazon, and they've expanded their home delivery with Instacart. And they're also investing in their technology. They're integrating their ordering with their demand forecasting so that they have fresh goods on stock when they need them, and they actually helps with their labor scheduling and the production planning as well. So if the companies that are keeping things fresh, keeping things exciting for their customers, as well as reinvesting in themselves, we think that that's a great fundamental that it will keep them growing, and it'll keep the risk and the real estate subdued.
Yeah. Yeah, a man has to eat, right?
People have to eat, and what we're finding is that people still like to shop.
Yeah.
And yes, e-commerce and grocery will grow. People will order food online, but we pretty much think that'll happen in more of the real dense markets in major cities, where that might take a dent out of traditional grocery sales. But in the primary suburbs and some of the secondary markets where you've got pretty good demand, that what we found is that being close to your customer is key.
Right.
So that when we look at demand for e-commerce in the grocery field, that the purchases that people make are going to be when they look at their fresh produce and their perishables, those things have to be very close to the customers to keep them fresh. So that's kind of termed last mile delivery, so that for someone like Amazon to come into the grocery business and to make an impact, what they have to do is either build warehouse space, which in densely infilled areas is hard to do because the real estate just isn't there, or take over existing grocery stores, like with what they did with the purchase of Whole Foods.
Yeah, it's interesting. Even though Amazon's online, they're getting into brick and mortar, and these stores seem to be changing, because you see some stores getting smaller, and you see some stores getting mega. I was in a brand new Kroger the other day, and boy, they had a separate sushi bar that was very fancy, a complete wine area, and in a complete cheese area, gourmet, and then someone there behind the counter to help you. So some of these formats are really getting large, aren't they?
They are getting large. What we see with, take a look at Walmart supercenters. They sell groceries. They sell, everything from soup to nuts. So people go in there to buy, undershirts and shoes. They can also pick up bananas and their vegetables for the week. We also see growth in wholesale clubs like Costco. Their grocery sales are growing, and they're basically making money by keeping the prices down. And the experience also plays a factor, like you mentioned, with the example with Kroger. They're betting on the experience of shopping. The people want that experience. It doesn't just apply to, we've written other papers on the mall experience, and a lot of your listeners probably are aware that some malls are going by the wayside and some are growing. Well, and the ones that are growing are investing in the shopping experience, and that's exactly kind of the card that the grocery stores are playing as well, that they're focusing on the experiences too. They're trying to come up with ways to draw the customer into the store and keep them in the store, with dining areas, sales of liquor, and things like that.
Yeah, and I think it's working. I do not like to shop. Sorry, retailers, I'm not a shopper, but when I went in that Super Kroger, it felt like I was in a place with little stores, and it was really interesting, and people specializing in what I was buying, and it really was an experience. And as I decided to go to a store again in that area, I thought about the stores. There were a lot of options, and I said, look, I want to go to that store because it has an experience. And gee, while you're there, you can get an Eagles jersey too, right? I mean, they sell everything.
Yep, for sure, for sure. And touching on the real estate end of it, you can also taking a look at one of the major players is Publix. Publix has about $1.3 billion in CMBS, and they are the fifth largest player in CMBS. And what they're starting to do is they see value in their shopping centers. Is they've got a whole real estate arm where they're actually growing where they the centers that they own compared to where they lease, so that they not only the benefit to them is they control the real estate. They get some cash flow from renting out the other stores in the shopping center, and they get the benefit of increased value of the center itself. So they get some price appreciation. So that kind of it goes against what people are thinking if you're under the feeling that e-commerce is going to be taking over grocery stores. Not so fast. One of the major players is making a big bet on the real estate.
Yeah. Well, Steve, how do lenders feel about retail today, and especially grocery-anchored centers?
Yeah, it's kind of interesting to look at. In terms of the CMBS view, is that the lenders, they're taking a small step back. Lending volume is down, and some of the other metrics that we look at as well kind of point to them taking kind of a less risky approach, along with decreased lending volumes on grocery-anchored shopping centers. The centers that they do lend on are in densely populated areas with high demand. The capitalization rates, or the required rate of return, are favorable. And the loan to values, in other words, how much money the lenders require up front from the borrower are higher. So we're seeing loan to values, drop to about 50 to 60% from 70 to 80% just a few years ago. So the loans themselves are getting riskier as well.
Yeah, well, it's interesting.
I'm sorry, less risky.
Right. It's interesting to see that because we sell shopping centers here at our shop at Bull Realty in the Southeast, and we're seeing tremendous demand from buyers, and I guess that's the way it goes. I mean, it's some people are shying away from it, afraid of e-commerce, but like you said, you've got to eat. These grocery stores are changing. They're embracing the internet. Some of my friends now that actually go to the store, they'll actually order online very quickly, repetitive order of their staples. They'll just pull in there and get it and get out. Well, Steve, what would you leave our audience with related to the CMBS market or the retail market moving forward?
Well, the thing I'd like to kind of focus on is that people are looking at e-commerce and wondering how much of an effect is e-commerce going to have in grocery. I think that the bottom line is that e-commerce is actually good for grocery. For e-commerce to grow their share of the grocery business, they've got to be close to where people live. So that's going to buoy the demand for shopping center and grocery stores. Now, the formats may change, and we expect them to keep evolving as companies invest in various technologies and experiences to try to maintain and increase the amount of foot traffic to their stores. There will be some fallout. Some of the players that are either in tertiary markets where there's competition and they're not making enough money to reinvest in themselves, they will probably go by the wayside. So we want to watch out for some of the tertiary markets. But overall, I think it's a good time to be in grocery-anchored shopping centers. You just have to make sure that you're focused somewhere where the demand and the supply are in relative equilibrium, and you've got a growing customer base.
Well said, and good information, Steve. Thanks for being with us today.
Thank you, Michael. Appreciate it.
And thank you, Steve. So if you'd like more information, visit morningstar.com. As I said, we'll put a link to the article in the comments below. If you're on iTunes or YouTube, you should be able to find it, or visit the website creshow.com. We'll have it there for you. If you have any comments, let us know what you think, and stay with us. We'll have more on the U.S. retail market. I'm Michael Bull. This is America's Commercial Real Estate Show.